stretch of July. There's only a few business trading days left of this month, and we can clear as day see that all the outrageous price projections and all the outrageous targets, especially on XRP from enthusiasts that have thousands of followers that mislead the general public, were wrong in their analysis, but still benefited from the views while their followers and viewers are left empty and wondering what the F is going on in the market. Alrighty, so in today's video breakdown, I want to thoroughly take a look back at July so that way everybody understands the landscape. As of time of recording, the market is experiencing a down day where at time of writing, we're seeing XRP hit some of our bearish callouts that we had projected in previous video breakdowns. Here you can see a July 20th Zoom call that we had where we had projected a pullback down into $3.25 to possibly $2.94 as our areas of interest. As of time of recording, as always, accuracy on another level. The deltas strike again. $3.25 to the freaking T is where this recent pullback has taken us into XRP. So we'll touch on that briefly. And then I want to paint the landscape clear for you guys so you understand some of the factors weighing on this market sentiment today, where we're currently at, what we need to be paying attention to moving forward, so that way we all understand what's going on, and briefly discuss on how we talked about all of these things that are unfolding now in previous calls. So that way you guys can see that we are one of the only communities on the face of this internet that is actually helping people understand these markets, not delivering them hopium and hype and outrageous unrealistic price targets. We're probably one of the only communities actually informing people on current market conditions and keeping them in the loop with what really matters. So taking you back here, starting off with the motivational piece. Once we're done all of this, we'll get into some XRP technical analysis. We'll look at the deltas on XRP, take a look at the total cryptocurrency market cap, and then I'll end the recording and we'll get into some Bitcoin and some ETH and then leave the floor open for discussion and general rhetoric. All right. So I said here in this post, and this is again something that is extremely important and near and dear to my heart, is psychology. I firmly believe without a proper psychological foundation, you will not make it in investing and trading. I said here, if you want to succeed as a retail investor, you have to do what 99% of the population will not do. Take bold action. Go all in with education. Pour every ounce of your energy, your effort, and creativity into building a skill set that prints results. Most think that this is a game of chance and luck, but winners know it's a game of discipline, mindset, and strategy. And that's where it starts. A mindset shift, a decision to separate from the crowd, and a commitment to master the craft. At CYPRX, we don't just help private members learn about trading and investing, we train them to outthink the competition. Because before you can outtrade or outinvest the competition, you have to outsmart them. And so that's exactly why we go over these fundamentals. We talk about the current landscape intraday, and we take things day by day, because now fast forward, we're at the end of July. We're coming into the very last stretch of July. There's only a few business trading days left of this month. And we can clear as day see that all the outrageous price projections and all the outrageous targets, especially on XRP from enthusiasts that have thousands of followers that mislead the general public, were wrong in their analysis, but still benefited from the views while their followers and viewers are left empty and wondering what the F is going on in the market. Well, if you come over to the history and the logs of CYPRX, this was our first bullish analysis for the month of July. You can see the timestamp, July 7th, 2025. And we had anticipated a bullish run into the deltas of $3.39 to $3.82 before significant profit taking or stalling out of bullish momentum unfolded. And so we always have historical timestamps to go over in this community. And then now fast forward to current price action, we saw buyer make an attempt to hit that $3.82 psychological level. We saw another failed attempt yesterday. And then today the market sold off. And we can see that we failed to hold above that $3.39 target and push into that 3.82 target that we had analyzed back on July 7th. And in a more recent update, in a July 20th Zoom call, we anticipated that this pullback could send us down to $3.25 to possibly $2.94 if market sentiment sour. or we saw some type of shift in fundamentals supporting risk assets, which is what we're seeing today. You can see that reflected in price now, right? The accuracy in this community is unmatched. It is literally unmatched. I've not found one other retail-based community that has institutional insights like this that gives them this type of edge. Not only that, but publicly, I was continuing to try to address people's expectations and trying to bring them back down to having some type of a realistic expectation in these markets, where I said this was from July 17th. Don't let this rally fool you. There are so many alts that are still massively undervalued. The long-term trajectory is up, but that does not mean that we won't experience turbulence along the way. In this community Zoom call from July 17th, 2025, we had talked about the market getting ahead of itself and possibly correcting due to some of the overly anticipated optimism that was being priced into the market being dialed back. So if you guys haven't watched this Zoom call from July 17th, we had already anticipated that if the bullish environment could not continue to sustain the risk on rally, it was most likely going to lead to some type of pullback. Now, the speculative fundamentals that we delivered in this call that would lead to the pullback have not come into fruition yet and are possibly still brewing, but we still mentioned and talked about the possibility of the market getting ahead of itself. And we specifically talked about in the Zoom call, the market pricing in bullish fundamentals, which is the environment that we are recently seeing or that we recently saw and the environment that we're currently living in. Okay. So just to show you guys all of the updates from July, keeping you guys ahead of the curve, now let's get into today's report. All right, so hopefully nobody is confused up to where we're at in the current landscape. Hopefully you guys have been paying attention to the accurate analysis that we've been delivering. And I hope that you guys really enjoy it because unlike the average retail investor, especially if you're holding a digital asset like XRP, their brains are manipulated mush and they are completely delusional with what is happening in real time in the markets that are driving their portfolios either higher or lower. And you do not want to be one of those uneducated retail investors. Why? Because already as retail investors, we have a disadvantage to market makers who have more data, who have more information, who have more analytics, and who can react in real time and split seconds to the change in market conditions. We as retail traders don't have that upper hand, right? At least not now. And so we have to take advantage of the opportunities to educate ourselves properly and gather the institutional insights that we do have. And in this community, we have institutional insights that 99% of other communities that are driven by retail traders don't have. So I just want to give you guys another split example because here I actually shared in the CYPRX research channel. This is a report. Actually, let me go to scalpers section. This is a report from the International Journal of Research publication from March 2025, right? And this is a report where it specifically talks about how market makers and AI algorithms shift their trading and their investments based off of fundamental analytics and a change in market sentiment. And so I wanted to show you guys that we are not only tapped into institutional deltas here, but also what the algorithms that are actually moving this market are tapped into. So you can see here, it says AI-driven strategies, on the other hand, leverage machine learning algorithms. They continuously learn and adapt to changing market conditions. AI systems autonomously analyze data, they detect anomalies, and they refine predictive accuracy, especially in volatile or uncertain market conditions. They gather data sources, including alternative data such as social media sentiment and geopolitical developments, right? And then here it goes on to talk about how they reassess and align their trading based off of high frequency trading data, news sentiment, and macroeconomic indicators instantaneously, right? And so that is why we are here in this community, not only tapped into institutional deltas, but also reading through these fundamentals, because that is exactly what the market makers adjust their positions to in this trading environment, which is what we're currently in, right? A lot of people don't understand that 90+% of the trading activity or the volume and volatility in crypto is due to trading activity. So for now, we have to remain headline driven and we have to remain goal oriented on understanding these fundamentals and what creates bullish environments and bearish environments in crypto. So now that that spiel is over, just showing you guys that you guys all have access to some of just the realest research in the game. It totally just blows my mind that people don't want to tap into this. Let's talk about the current landscape today. The total cryptocurrency market has experienced modest profit taking, a decline by approximately $90 billion. That was at time of writing this rising. Let's see what we're at. Give or take a couple billion more. It's about $104 billion down. So now, right, you guys can see, look at the past two previous weeks of price action. I've been telling you guys, and I think even, who was it yesterday? Was it Vic or somebody that asked me, why haven't I sent out dollar cost average positions? This is exactly a prime example because up until today, we haven't seen a day in the total cryptocurrency market cap where the market cap has shed over $100 billion. Literally, we've been in an uptrend pretty much the entire month of July. You can see right here, this was the transition over into July. And up until this point, we haven't really seen an opportunity where the market's been discounted that meets our DCA requirements. Okay. Now, today is the first day where one of our requirements, $102 billion down on the day, has met our DCA threshold. Okay. And so this is the power of patience. This is the power of not feeling FOMO and missing out and understanding that the market does not go up for forever, right? This pullback follows another failed attempt by buyers to push the market decisively above the $3.9 to $4 trillion threshold, despite recent bullish momentum. The current macro backdrop, including geopolitical developments, trade negotiations, and monetary policy uncertainty, has tempered risk appetite in the near term. So let's break down the factors contributing to this consolidation. And you can see these were just some recent outlooks that I projected publicly on X, where I said, however, beneath the surface, so this is again just me trying to align the general public with what really matters. I warned here, I said in a previous post, however, beneath the surface, signs are emerging that the rally may be losing steam. Despite the recent strength, we've now seen a second failed attempt by buyers to push price higher, with sellers beginning to subtly show their hand. And this is in a report from over a day ago that I wrote to the general public. The market appears to be pausing, awaiting a fresh catalyst before determining its next directional move. All the uncertainties that we highlighted in recent Zoom calls are still in play. Lingering questions around monetary policy, a fragile risk-on narrative driven by rate cut expectations and unresolved geopolitical tensions, especially in global trade negotiations. You can see with this screenshot from last week's high, we've now seen buyers make a failed attempt, not once, not twice, but now 3 times to push price higher, which has now led to some significant profit taking and a slight retracement in price action. On the US-Japan trade front, in previous updates, we had highlighted that the US-Japan trade negotiations were possibly on the horizon, and we discussed that there's a possibility the market's likely pricing in a favorable outcome well in advance. And that was this Zoom call here from July 17th, where we had talked about the market's pricing things in. That currently appears to be the case. President Donald Trump officially announced a deal lowering proposed tariffs from 25% to 15% on Japanese imports, while Japan committed to investing $550 billion in the US and opening its markets to more American goods. I'm going to read some of these highlights, these screenshots from these reports that I found, but it says, while this news did provide some tailwinds for risk assets, which is supportive, it failed to generate the type of bullish extension that many traders had hoped for, largely because the market had already anticipated the move of this outcome. Equities, including Japan's Nikkei index, responded positively with a strong momentum, particularly in the auto sector. However, the total cryptocurrency market, which had already priced in the optimism, saw little net benefit from the finalized announcement. And so you can see in these little tiny screenshots, it says Japan's exporters had already adjusted to tariffs. Average export prices to the US dropped 18% last month. So the effect of the deal between the United States and Japan is perhaps not as big as it might seem. Then right here it says, the brief and small lift in the JPY may suggest a US-Japan trade deal was somewhat in the price before the announcement. It also mentions here, the deal is providing some boosts to markets. Sentiment on the ground, the worst case tariff rates have been avoided. Sorry, let me reread that. The deals are providing some boosts to market sentiment on the ground that worst case tariff rates have been avoided, but share markets have already rallied sharply to new highs in many cases, so a lot of the good news is already factored in. And so these are reports from Reuters, and this is data that's gathered from, it says right here, senior economist from SBI, right? SBI Sensei Bank. This is a bank. This is an economic, analyst perspective from a financial institution. Okay. And this is from today, this report that I'm reading to you guys today. And we can see how days in advance we had already talked about the market getting ahead of itself and possibly dialing back some of that optimism that was being priced in days in advance. And now we're seeing that in reality. And so I'm just trying to show you guys how exactly what we talk about in this community is literally what the freaking economists from the banks are talking about. Okay. So that was really just clutch to see. One of the primary reasons why, even though we've seen optimism surrounding the US Japan trade deal, the market already priced it in. And now that the news actually dropped, it's like, okay, there isn't anything net newly positive that the market already didn't anticipate. And so buyers are taking profit likely, and sellers are starting to show their hand. On top of that, here you can see some notes that I highlighted for you guys. I'm not going to read all of these, but it says market analysts across Asia and Australia weighed on the deal's implications. There's two that I put in bold and italics that I want to read. And it says, this is Richard K. from Comguest. He explained that Japanese exports had already adjusted to tariff risks, with export prices to the US dropping 18% last month. This muted the actual impact of trade deals. So this is coming from a financial economist with expertise, right? With experience. Then here, this is Shane Oliver at AMP Capital, which seems like it's like a hedge fund or something like that. He said that agreed the deal helped avoid worst case tariffs, but reiterated that much of the good news is already reflected in the prices of markets. With asset prices at elevated levels, any fresh risk off headlines could have an outsized impact. Why is that so important? Because in previous Zoom calls, I believe it was yesterday's call or the day prior, I had mentioned to you guys that worst case tariff scenarios for the EU situation has not been priced into the market. And you can see that down here. This is our report from July 21st. You can see the timestamp up there. As of time of recording is July 23rd. And I said to you guys in this report that if we saw retaliatory measures or uncertainty surrounding the European Union and the US unfold, it could weigh on markets. And that is exactly what we're seeing today, right? So in previous reports, we touched on the EU and US uncertainty. In a potentially more impactful development, the European Union announced it will consolidate its two retaliation lists into a $93 billion countermeasure package against the US imports. The move is intended to simplify and strengthen its negotiating stance ahead of the August 1st deadline for a deal with the Trump administration. You can see right here, it says EU readies a single $93 billion US trade retaliation package. And in this report from July 21st, I mentioned to you guys that we could see a reintroduce of risk off sentiment that could quickly dent the current bullish momentum in equities and crypto if this event that we highlighted in this report from Bloomberg came into fruition. And we highlighted right here, it says, this is the EU's most powerful trade tool, which would give the European Commission broad powers to take retaliatory actions against the US. So we talked about this 2 days in advance, mentioned to you guys that if we saw this situation escalate, it could create a pullback scenario in crypto. And now fast forward to where we're at today, you can see the EU doing that. They're taking retaliatory actions and the market is not gravitating towards it. They don't like it. The market does not like uncertainty. It doesn't like things that could cloud the future trajectory of the investment landscape and inflation and economic strength, right? And that's exactly what these things do. So if no deal is reached, the list will come into force on August 7th, targeting American exports, including bourbon, soybeans, and aircrafts. This presents a significant risk. In previous updates, we warned that escalation with the EU could be worst case scenario and not yet priced into markets. With negotiations faltering and President Trump threatening 30% tariffs if no deal is reached, market sentiment could continue to shift rapidly if talks continue to break down. So ideally moving forward, what we would like to see, if we want to see a sustainable continuation in risk on sentiment, is some type of positive trade negotiation between the EU and the US. And if not, and trade talks continue to sour, and the EU does enact their retaliatory measure against the US, it's probably going to broaden out and spiral into some type of risk-off induced event, creating a deeper retracement, which we'll get into in just a second. Adding to the global uncertainty, we obviously, of course, mentioned to keep an outlook for the geopolitical spectrum. Recently, Ukrainian delegations arrived in Ankara for a bilateral meeting with Turkish officials ahead of further peace talks with Russia and Istanbul. According to sources, Kyiv is willing to take significant steps toward a full ceasefire. While any meaningful progress here would be a positive sentiment for broader risk assets, the geopolitical situation still remains fragile. Here is a snapshot of that report. This week's economic calendar remains relatively light, with U.S. new home sales and unemployment data next in focus. However, the true test for crypto markets may come next week, when central bank speakers, including those from the Federal Reserve, are expected to provide guidance at the next policy meeting. If we begin to see hawkish rhetoric pushing back on the timing or scale of expected rate cuts, this could weigh heavily on crypto. In addition, upcoming inflation data, including core PCE, core CPI, and PPI, will be critical in determining whether the Fed maintains its recently dovish stance or reconsiders its approach. Despite today's pullback, the crypto market remains in a broad uptrend. As long as the total cryptocurrency market cap holds above last week's lows and stays supported above the $3.59 trillion level, bulls still remain in control, and we'll briefly touch on this when we take a look at price action. A continuation higher would follow if we stay above last week's low once this current pullback phase is complete. However, should we break below $3.59 trillion, which is last week's low, it would open the door for a deeper correction down towards July lows around 3.2 trillion. This would likely reflect a repricing of the optimism that fueled the recent rally, particularly if external catalysts such as yen strength, EU tariffs, hotter US data pushing back on rate cut bets, or hawkish Fed commentary begin to dominate headlines. The key theme right now is still uncertainty across trade policy, geopolitical dynamics, and central bank guidance. While the market is taking a breather, the bullish structure has not yet broken, which we'll cover here in a second, but conditions can change quickly. As such, it is critical for us to remain adaptive and continue to monitor developments closely. You guys like that key vocabulary right there, adaptive, because again, remember, we showed you this report from an International Journal of Research publication from this year, and it talks about how these algorithms that control the markets, they remain adaptive and they change to different market consensus. So it says right here, they adapt to changing market conditions. They analyze data. They detect anomalies, right? And so that's exactly what we're going to do. And you can see right here, it mentions what things they monitor. Geopolitical developments, right? It says it right there. Social media sentiment, right? All these things that these algorithms track are the same exact metrics to some degree that we're tracking here in this community. So let's continue to stay alert, stay informed, and continue to monitor the current market outlook. So let's go over to price action real fast. Take a look at XRP. Then we'll take a look at the total cryptocurrency market cap. As of time of recording, right now, buyers have slightly defended their previous positions at $3.25 on the lower time frame. Right now, we're on the 4-hour. We drop down to the 30-minute. Even though we've seen buyers come in and slightly defend, or maybe this is even possibly some selling, taking profit, we have not broken below the $3.25 range. So for now, as long as the environment doesn't worsen compared to where we're at right now, that means maybe we see positive trade announcements between the United States and the US. We start to see uncertainty dissolve. We start to see continued optimism that the Fed is going to cut rates in the near term, i.e., towards the end of this year. We start to see any positive ceasefire talks or any negotiations on the Middle East front or between Russia and Ukraine. So anything that continues to drive or be a driving factor for risk-on sentiment, and we hold above $3.25, we could start to see some consolidation here. And we could start to make our way back towards the upper half or upper portion of this recent range at $3.60 to possibly break out, to see buyers make another attempt to continue this overall bullish trajectory, to break or retest, revisit $3.82. If market sentiment continues to worsen from where we're currently standing at now, and we cannot see buyers defend at $3.25, leading to a break or push higher above this most recent consolidation, it's most likely going to result in a breakdown, and we're probably going to see sellers overpower at $3.25, and that's going to open the door for our next bearish target at $2.94. That is going to be of some concern because that will put us into last week's low territory, which comes in currently at around $2.75 to $2.80. Just doing a quick forward outlook, if we were to break $2.94 and we were to go below last week's low at roughly around 280, the next delta after that comes in at 275. And in a worse and more extreme risk-off environment, if we were to correct the entirety of July's move, I'm going to let you guys know now that anything under $2.75 is going to open the door for me to start to dollar cost average into some DeFi XRP bags. So that means XRP that I'm going to be utilizing in DeFi, I will definitely start to accumulate some more XRP if we do end up breaking back down into $2.42, which will be a nice full-on correction of the July move. The July low right now comes in at about $2.18. So if I was to take a fib from the July lows to the July recent highs, you can see that that would put us at about a 79% discounted. That is an appetizing discount for me, knowing that I'm not chasing the market, getting it at a previous discounted environment where market makers at the beginning of July were significantly buying aggressively into XRP. I would definitely look at some opportunities if that price unfolded. Up until then, I'm just going to take this day by day, still paying attention to market conditions. You guys now have well, actually, let's do a reassessment of some upside targets, okay? Because we still have some higher levels that have not been met. And so if the market sentiment continues to the upside and we can hold above last week's low, so maybe we do see some continued sell pressure and profit taking, but then the bullish structure in terms of the weekly remains intact. So that means the market's still making weekly higher lows and weekly higher highs. We could still see price discount into $2.94 to $2.75 to reaccumulate orders and trail back to the upside. If we end up doing something like this in a continued risk-on environment under optimism or bullish fundamentals, and we break above $3.82, on our radar to the upside, above $3.82 is still $4.44 as some possible profit-taking targets intraday, if you're into that kind of thing. And above $4.44, our highest institutional sell delta still comes in at $5.17 on an extremely optimistic and upbeat market sentiment mood. But again, we're not going to project that that's going to happen overnight. We need to overcome these two levels first before we even host a Zoom call talking about the potential possibility of a $5.17 XRP. All right. So you guys now have bearish targets and bullish targets. Make sure you guys update your deltas. Let's take a look at the total cryptocurrency market cap.